Hello and good morning, everyone. Um, Last video of the week, I took a trade on Kiwi dollar to the sell side. We'll explain to you guys why the trade was taken, where the trade was taken. Um, there were multiple reasons for getting in on this trade. Uh, of course, first one was job openings on dollar during New York session yesterday. Uh, but there was more to it. It wasn't just um, the news release, the news event, and I'll explain it to you guys why. So, uh, probably the biggest trade of the year so far, uh, 48 R, this one, 47.92 R. I could not make 47% off of this, if I'm being honest, because I took profits three times on this, right? I took profits three times on this trade. Let me explain to you guys where the profits were taken, why the profits were taken. Uh, so I could not make 47% off of this, but made pretty good money on this. So here we go. Let's initially let's look into the economic calendar for yesterday. So we had quite a bit of news on Aussie, nothing on Kiwi though. I took Kiwi dollar for the sell side, so there was nothing on Kiwi, but there was employment change in Aussie, and then we had jobless claims in dollar, initial jobless claims, um, Fed manufacturing index, and Fed employment. So quite a bit of news in dollar. 30 minutes into New York Open. So this trade is basically coming from a higher time frame. This is a 240-60 trade. So let me explain something to you guys. I personally trade based on three time frame rule, right? What I generally trade is a 15-3. We call it a 15-3 trade, where 15 minutes, mostly, not always, where 15 minutes is my bigger player, and I want to join in with that bigger player to the direction wherever it's taking the markets. So if 15 is my bigger player, I'm reading my pullback on 3 minutes and then my entries. Just gonna leave it there. Then my entries is on 15 seconds, right? So three time frame rules. It's a three time frame rule, not rules. It's a three time frame rule. So if I'm watching 60 minutes as my bigger time frame, and this comes with practice, right? You cannot just jump in to the markets and start talking about I'm a 15-3 trader, I'm a 60-15 trader, blah blah blah. uh, it takes time, it takes practice. You have to spend time on the charts to try and figure out what time frame is in control. Okay. If I'm watching 60 minutes, I'm reading the pullback on 15 minutes, and then my entry is on 3 minutes. This is how the three time frame rule works. Okay, let me just get rid of whatever I just wrote, and then this trade is basically coming from 240. So if 240 is my bigger player, uh, I'm reading my pullback on 60. So 60 is who I want to turn into buyer. If I want to sell, I want 60 minutes to turn into a buyer if this trade is coming from 40 minutes. And I'm going to explain to you guys the fractal nature of the markets, that it'll work the same way on every time frame. It's just what you need to understand and try and figure out is when a specific time frame is going to kick in, right? So this trade basically coming from 240, if you take a look at 240, it's a pretty nice lower low seller that started up there, went all the way down to there, and since then been pulled back for 2 long days, for 2 days. So for um, Tuesday and Wednesday, it kept pulling back. uh, while it was pulling back, I took a sell on dollar on uh, Wednesday, no, on Tuesday, I suppose. On Tuesday, I took a sell on dollar, where this buy on Kiwi dollar, I took on pound dollar, because I could see, right? Because as it came down, it ranged, and then a new buyer came in that held, went higher high, and then chopped around, choppy pullback, and then the buy did come in. But the buy did not really go for a very far distance, and that was in the back of the head, because higher time frame, daily or 240, was still a seller on this chart. That means it's a dollar buyer. And it can get confusing for you guys, but try and understand. And if you have any questions, you can always ask us in the Discord, or even on the YouTube channel, blah blah blah. Right? So 240 daily, both of them are beautiful sellers, and then the price starts to pull back, keeps pulling back, pulling back, pulling back, and in the process of all of this pullback, where pay close attention to what I'm going to show you guys right now. So this is that full move down on Kiwi dollar of the seller, and then it just ranged. There's no higher high, higher low sequence. A pullback is always when there's a higher high, higher low sequence in a sell. In a buy, I think I've mentioned it before, I'm not sure, but it is mentioned in the course. uh, a pullback is always a higher high, higher low sequence. In a downtrend, that's your pullback. In an uptrend, your pullback is always a lower high, lower low sequence. So if it's a 240 trade, I'm watching my pullback on 60 minutes, and on 60 minutes I can clearly see that this is not a pullback, because it just, you know, ranged to sideways, and then this buyer makes a higher high, pulls back, holds, makes a higher high, pulls back, holds, almost makes a higher high, pulls back, holds, makes a higher high, pulls back, holds, makes a higher high, pulls back, seller comes in, makes a lower low, goes through the last bit of buyer, right? Let me get rid of all of these brushes and we'll take it from the top again. This buyer, in the process of all of this pullback, notice that at any time the seller was not in control until this happened. The seller, it went through this buyer. Uh, so this was basically a 60-15 and a 15-3 trade altogether, because we I'm not sure if I should be mentioning it here or not, but my mentor, where I basically started to learn trading, they term it as eclipse, and that is why it has done 48 hour, because this was an eclipse. What does an eclipse mean? When the highest of time frames, that's daily 240, starts to line up with the smallest of time frames. In this case, the entry again was on 15 seconds. Doesn't happen always, happens not too often, um, but every now and then you'll come across something like this, once a month, twice a month, and that is when you should be able to capitalize on it, right? So if and I'm going to show you guys what I'm talking about. If I take you to 15 minutes, you've seen the 60 minutes, right? You've seen the 60 minutes, and keep this picture in your mind where, hold on, where this buyer was the last one to buy, and then the seller took over, right? We can clearly see the seller started up there, ended all the way down there. We can see it. If I take you to 15 minutes and blow your minds, it's the same buyer and seller on 15 minutes too. It's the same buyer that bought down here, went all the way up to there, then we ranged around, and then it was this seller that took over this buyer and started to hold, started to chop around. Okay, now this also lined up with news to some extent. It's not your typical news comes out, we trade the pullback. We could have traded the pullback to the news too, but what was bothersome, because the news came out at 17:30 my time. That is this candle. Let me just, the videos might get a little longer, so bear with me. Um, okay, let's dig into it one more time. So this is not your typical news comes out, we trade the pullback, although it was this candle, right? The one that I'm marking, this is where the news came out. It pushed the prices lower with strength, with force. But the thing that bothered me to take a trade here was this buyer. Okay, pay close attention to what I'm talking about right now. If you want to learn, pay close attention. Okay, I don't care if you're gonna buy the course, if you're gonna join the Discord community or not. What I'm trying to tell you guys is how the rules and discipline come into play. So the news comes out positive for dollar, pushes the markets lower, but does not break anything. This buyer still in control. This buyer tries to buy, and then the follow through of that news takes the prices lower. Break of structure, buyer taken out. This could be liquidity, change of character, whatever you want to name it. I don't care. What I care about is that a news came out that pushed the prices lower, could not go lower low, but then the pullback of that news that on 60 and 15 minutes has introduced a new seller. As this new seller is introduced on 15 minutes now, coming back to the fractal nature of the markets, I'm treating this trade as a 15-3 trade instead of a 240-60 trade. Hence, the stop loss is so small. The reason why the stop loss is so small is because I understand how the fractal nature of the market works. Because I understand that if this 15-minute seller has come down, taking over that 60 minutes buyer and 15 minutes buyer, it should act like a 15-3 trade instead of a 240-60 trade now. And to add to the confidence, if you take a look at the rest of the dollars in your own time, all of them were doing the same thing. Aussie dollar, let me give you a couple examples. Aussie dollar, this moved down, this pulled back up. Euro dollar, this moved down, this pulled back up. Pound dollar, this moved down, this pulled back up. Uh, dollar CAD, this move up, and then this was a pullback. It was a little different than the rest of the dollars, but more or less the same thing. Swiss franc is pretty strong itself, so not gonna get into that. Swiss franc is pretty strong itself, so I was basically more interested in Aussie Swiss franc or Kiwi Swiss franc, but I couldn't find any entries in them. Hence, could see an entry in Kiwi dollar, right? And I did take that trade. Now, I've shown you all the dollars that start to do the same thing at around the same time. This is where the correlation and more confidence comes in. And then I am watching the pullbacks on 3 minutes, okay? On 3 minutes, let's walk you through the same thing that we talk about over and over and over and over and over again. What is that? For the bigger seller to make money, buyers need to be introduced into the markets. This is where the trade was taken. Hereabouts, yeah. For the bigger seller to make money, buyers need to be introduced into markets. When do the buyers get introduced into the markets? Do you think it's here? No, everyone's looking to sell because it just ranged. It broke a support equals resistance. It came all the way back down. Sell, 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 sell. Stop loss, maybe up in here, up in here. I don't care. As the buy starts to come up where everyone is selling, turns them into a buyer with this little bit of buy that happened. And you might have seen the same example in one of the trades that I shared. Let me just try and recall that trade. It was a sell that I remember. It's one of the cells on the YouTube of you, the recent cells, where a support equal resistance gets broken, and the area where I say there, this is where you take the decision. The reason why the decision was taken here, again, I wanted to see a bit of a rollover. You can't really see a rollover on 1 minute, but on 15 seconds you can if you go, because I was treating it as a 15-3 trade, so my entry is supposed to be on 15 seconds as my precision time frame, and it is gonna get very confusing for you guys if you're not paying attention, if you haven't been going through all of our videos. even if you have been going through all of our videos, this is very advanced stuff, and it is gonna get confusing, but it's not that hard, I promise you. Okay, uh, so as the prices start to, as the buyers get introduced into the markets, this buyer buys, holds, buys again, this buyer buys, goes through, pulls back, buys, and then boom. And then this buyer buys, okay, holds a little, buys again, comes down, starts to hold, and falls down. As this fell down, the tool has been moved a little. As this started to fall down, I immediately took my sells. What was my price? I think 59,215. Yeah, this is where the trade was taken. Stop loss just above this, because if my trade is valid, if the seller is selling, if this is the seller that was supposed to come back, price should not go above this. If it goes above this, this is an invalid trade. So quickly gonna let you know, guys, know how I manage this. So initially I was aiming for all the way down to just here. This is about 9R, because of looking at how the buyer have been coming up, massive rejection, higher highs and higher lows. So initially I was just counting on the price to, for this seller to follow through, right? And if, as we've talked about multiple times, if this seller is selling, if there's a new seller, he's selling, he's going to want to attempt a lower low. If he fails, that's a different story. I took 50% in here at around 9R, then I took another 50% of what was running at around here before I went to bed. I'd been up all night, for whatever reasons, so I took another 50% at around here. That makes it around 18R to 20R, and then I went to sleep, and then I woke up. My take profit was set here on this. Because of how it's been going down for so long, I wasn't expecting it to continue to go down for a very long time. My take profit was set here. It did attempt a lower low. Looks like it's failing at the moment. That's what we always talk about. If a seller is selling, he's gonna want to attempt a lower low. If he fails, I'm sorry, that's a different story. So whatever was remaining, that's about 25% of my original position, did a 48R on this. Okay? Again, it's not going to happen every day, but it is going to happen. And that is what you should be able to capitalize on. Not going to trade today. A wonderful end to the week yesterday. Had quite a bit of uh, busy trading week. Although there was not a lot of news, but the week still turned out to be pretty busy. There was some significant news, but not a lot of it. But still, turned out to be a pretty busy week. If you've been going through the YouTube videos, you'd know I took about 4 trades this week. 5 trades, in fact. One of them was a loss, 4 of them were profit. We'll do the market review tomorrow. Okay? Cheers, guys.